My guest today is Chris Kuiper. Chris is the Vice President of Research at Fidelity Digital Assets. Welcome to the show, Chris.
Thank you. Thanks for having me.
It is an absolute pleasure. Just before I guess jump into things, Chris, it'd be super cool just to get a little bit of background from yourself. Be cool if you could share a little bit of your personal and professional backstory. What have you been doing in the lead up to joining the team at Fidelity?
Sure. So I got my start in traditional finance. I always loved capital markets. So I worked as an investment analyst, researcher. I've been in research my entire career. Absolutely love it. And I've researched mostly on the equity side. I got my start researching tech companies. I love technology. I'm not a developer or programmer by any means, but I've always enjoyed tinkering with computers, building my own computer, that sort of thing. And it was through the technology side of stuff, not the finance side, that I discovered Bitcoin in 2012 and fell down the proverbial rabbit hole. And I've been falling ever since, and absolutely excited to get the opportunity to be here at Fidelity. I've been here for a little over 4 years now, where I can make it my full-time job talking to people like you and others about Bitcoin and digital assets, rather than it being a smaller part of my regular financial day job.
Yeah, fantastic. And do you want to just give us a little bit of background? I mean, people will have heard of Fidelity, and I think a lot of people listening to this will be familiar with Fidelity Digital Assets, but it'd be good just to kind of understand a bit of the context in terms of what Fidelity Digital Assets is, who's involved, who's it for, all that kind of stuff.
Sure, it's a great story. I love telling this story. Never gets old to me, because a lot of people know Fidelity, the Fidelity, right? Many people have their workplace retirement accounts with us, and HSAs and 401ks and all that good stuff. But a lot of people are still surprised to hear about Fidelity Digital Assets. And so technically we're a subsidiary of Fidelity, but for all intents and purposes, rolled into the big Fidelity you know now. And we started this, Fidelity started this, was well before my time, already back in 2014. Fidelity has a pure R&D center where they're constantly just trying things out, getting their hands dirty. And of course, they came across Bitcoin quite early. And one of the first things they did was they started mining it. They said, if we're going to understand this, let's start mining it. And so they started with some small miners. Eventually, they got bigger miners. And then as they started to mine it, they said, what if we want to hold it? And there was nothing out there in terms of the institutional enterprise grade landscape available to custody these digital assets. As you know, custodying digital assets is unique. It's got some interesting challenges and nuances to it. So they went ahead and they built their own. We built our own custody solution from scratch. That is our main product today at Fidelity Digital Assets. And that is the custody solution that powers or sits behind all of the different Fidelity crypto products that you see today, from Fidelity Crypto on our brokerage platform for all of our retail customers, to the exchange traded products, to the IRA product, to custodying and buying and selling with Fidelity Digital Assets directly. And I sit on the research side, so I do research and lead the research team, helping people understand the space, how it works, how does it fit in your portfolio, how do you think about risk, reward, balancing, all of those sorts of things is what we focus on.
Got it. Thank you, Chris. Well, I thought today would be interesting just to get your perspectives on, I guess some different segments of the digital asset space, just from, I suppose, your position as a, institutional researcher, if you like. It's been, look, it's always a cliche to say it's an interesting time in the markets, because it is literally always an interesting time in the markets. But I guess, where should we start? Let's start with Bitcoin. You said yourself, you've been watching Bitcoin since very early on. Of course, the story of recent years, I suppose, is the institutional adoption of Bitcoin. How would you describe, the institutional adoption of Bitcoin at this moment in time? Kind of where are we at the moment? How are institutions thinking about Bitcoin? How do you think about Bitcoin, Chris?
Sure. So it's been interesting, even just in the past 4 or so years I've been at Fidelity, to see. We used to do these surveys that showed we were still very early with institutions. About half or so had heard about it, digital assets, Bitcoin, but very few were making allocations. We haven't done the survey in a few years because eventually it got to the point where it wasn't a story anymore. It wasn't a big deal to show how far institutions have come. So in one sense, the institutions are absolutely here. They all know about it. They're all building products for it or have things in the works. Every day you hear about another big financial institution doing something with digital assets. So that's not a surprise to anyone anymore. And really, there's the watershed moment, of course, of the approval of the exchange trade products that opened up massive amounts of capital. The biggest, most successful exchange traded product launch in the history of these products, for sure. And no matter how you gauge it, fastest time to certain AUMs or trading volumes or anything like that. So that was a huge watershed moment looking backward a few years. But what surprises people, I think, is still how early we are. And I'll just give you a couple anecdotes. I was at an event a number of months ago for pensions, and pensions are notoriously the slowest to adopt some of these new things. And there was a couple hundred people in the room, and I just did a straw poll. Show of hands, how many of you here think digital assets deserve a look and may deserve a position in your portfolio? And it was single digits. Hundreds of people, and only a few brave souls raised their hands. So they know about it, they hear about it, they see in the news, but they are still not convinced. And there's even fewer people that are making the moves. Now, that said, that's an extreme example, pensions as a segment. We are seeing some other groups, I would say high net worth individuals, and especially the advisory market is probably the fastest growing, the lowest hanging fruit, because you have clients asking about it, clients doing it on their own. And so they're pushing along the institutions. It's very much a push relationship for them. So still early, but I think now that all the groundwork is there, the infrastructure is there, the products are there, the compliance is coming up to speed, we've got clarity on regulation, I think it could move a lot faster than what people think or realize. These things tend to go slowly and then all of a sudden very fast.
Yeah. Excellent way of describing it. Thank you, Chris. You know, I was looking through your Twitter account, Chris, and you kind of you talked about, I guess, perhaps one of the key questions that market participants are asking at the moment. And, you know, the backdrop being, of course, if we do have all these we have had substantial flows into Bitcoin through ETFs and the various Bitcoin treasury companies, etc., all throughout the last, 12, 18 months, whatever it is. And yet Bitcoin has struggled to maintain and, stay above fresh new all-time highs. And the question that you, of course, articulated, Chris, is, who is selling? So I guess what's your take on what is happening with all these new inflows from the institutions, etc., but Bitcoin can't quite catch a bid?
Yeah, it is the most disappointing season for Bitcoin investors. I think almost all of them were so excited to go into Q4 against this backdrop of everything lining up. Throughout the whole year, they've seen the exchange traded products doing massive amounts of flow into these products, which is a constant bid, constant demand. And then you've got the corporate treasurers, the Bitcoin companies that now own over 1 million Bitcoin. They've picked them up really all in the last year. So we can see all these people buying. And then we look around, we turn around the price, and we think the price should be at 200, 250 or something crazy, and it's down. And everyone says, what gives? Who is selling to these people? And of course, we have some on-chain data that gives a little bit of clues here. And the one I posted on, I like how you call it Twitter yet. That one was just a simple metric of coins that are active in the last year, a year, or coins active for not active for a year or more. So coins that have been dormant for a year or more, what percentage they are of the network. And you see with every bull market, long-term holders sell into the bull market. And as the price really gets rocketing up, that line drops precipitously, meaning the percentage of long-term holders is dropping. So they're selling into that bull market. What's so different about this time around is that the slope is so gradual. We hit 2 new all-time highs this year, and it's just been gradually bleeding out, meaning these long-term holders are just constantly selling. Now, thankfully, we have had the exchange traded products and the corporations because they've absorbed around 90% of that selling. So that's what's kept the price from going lower, but it's also kept the price just chopping and consolidating here around 100K. And we're even struggling to keep that right now, I see. So it's definitely disappointing for a lot of people, but I think it's a glass half full, glass half empty kind of scenario. Without these buyers, we'd be a lot lower. And I think it's a natural part of the evolution, maturation of the asset space. we've seen this before. People have held a long time for whatever reason. They want to sell, they want to realize some gains. We're getting into year end. They might be making some tax moves, and it turns over into new hands. It disperses those holders, and that's healthy. Long term, that is healthy, in my opinion. So, kind of hurts now. People were expecting the seasonality of October, November, which is usually very strong. I get it, but I think long term, this is a healthy rotation.
Yeah. Thank you, Chris. What about, I guess the macro backdrop against, or across the next 6 months, 12 months, whatever you want to look at? There are a number of things that you think might potentially be tailwinds for Bitcoin, but of course there's headwinds as well, and it's always one step forward, 2 steps back with whatever comes out of Trump's mouth. It seems sometimes when it comes to the markets. But yeah, what do you think in terms of what the Fed might do with rates and so on like that? What's the sort of the macro view, do you think, Chris?
We've certainly entered a rate cutting cycle. Now, of course, the last one not accepted. There was a bit of a hawkish tone to it, but I think that's a lot of noise. I think you have to zoom out and say, like, where are we at in the entire cycle? And I do think we're entering more of an easing cycle. And it's not the rate cuts per se. It's actually total liquidity to look at. And we found the 2 biggest macro drivers, at least in terms of correlation, the ones with the highest R squared that explain the most about Bitcoin's moves, are global liquidity. And you could just look at something like M2, the money supply, like a broad money supply, especially look at it on a global basis. The US is actually quite tight compared to a lot of other countries. And inflation expectations. So those are the 2 things I'm going to continue to watch into the next year. Certainly seems like we're entering a new era of liquidity. We've got quantitative tightening ending. We've got rate cuts with the government shutdown ending. We'll see the TGA, the Treasurer's General Account, come back down, and that liquidity enter the market again. It's a small amount, so I don't want to read too much into that. But I think overall, that's the thing to watch. And then inflation expectations is the big one too. We're seeing it still be high. If inflation expectations pick up, that will be another driver as well. But of course, these things can go the other way as well. If they come way down, if we get into a softer economy or recession, that's going to, in the short term, lower the demand for sure.
Yeah. And what about the Bitcoin corporate treasury companies? Any risks to them if the market does continue to go sideways or even perhaps down, Chris?
So this has always been a concern as we've watched these companies really be a big driver demand on the way up. And of course, the question is, well, could the opposite happen on the way down? And of course it could. The one thing that we've looked at and really pointed to is you want to look at the leverage of these companies. If the leverage gets out of hand, that's when people get in trouble and they have fewer options. So, for example, we did see just this past week or so, one Bitcoin treasury company sell some of their Bitcoin, and they are the first to do this in this cohort, and they did it to pay back half of their convertible debt, as well as open up some more optionality for share buybacks. So just as they added to demand on the way up, they did add some supply and reduce that demand on the other side here. So we'll continue to watch that. Overall, though, most of these companies are not highly levered. So I don't think that's as big of a concern. More of the issue is really just the sentiment around them, whether or not they trade at a very high premium or whether or not that comes down and they trade below their MNAV, which is the metric to watch for sure. So big driver. We've seen it slow, but I don't think these companies as a whole, as a segment, are going away. But there could be some consolidation. We'll see how much the market can support, how many of these the market can support in each geographic area. And I think that's the key thing to watch too. Like, a lot of these companies have these opportunities because they're in certain jurisdictions that have different setups, whether it be through their taxes or investment mandates or something like that they're able to offer products that people can access. And so that's the other thing to watch, to see how those tax regimes or other regulatory regimes change.
Yeah. Chris, obviously Bitcoin has been described or understood as digital gold for some time now. Is that still I guess, a worthwhile framework to understand Bitcoin? Is there more to Bitcoin than that? And as part of that story, everyone has always expected Bitcoin to outperform gold, and yet that has not really been the case this year. And do we expect that to change again at some time? Yeah, the gold, the digital gold. What are we thinking here, Chris?
So I think it's a useful model to start with as in terms of understanding what Bitcoin is, because if you look at the characteristics of money, and not to get too esoteric, but I do think this is really helpful. If you look at history and you ask the question, what is money? What has been used as money across time and history? It's been gold, it's been silver, sometimes it's been seashells or wampum or fur or whatever. And you realize, well, why did one thing become money and something else didn't? Or why was one thing money for a time and then it was replaced with something else? And economists and historians have come down to all these different factors that make for good money. It's divisible. It doesn't decay or rust or rot. It's very portable, so it has a high value to weight ratio. All these things make for good money. It's fungible. You can swap one for the other. Diamonds, for example, are very valuable, but they make for really bad money because there's different cut, clarity, carats, all these things. You can't swap them. You'd have to look at every individual diamond every time you want to do a transaction. So if you go down that list, you see that Bitcoin has all the same characteristics as gold, and then even improves upon some of them. It's more portable because it's digital. You can send it around the world. It's more divisible. It's more verifiable. Anybody can check that their Bitcoin is genuine in an instant, whereas gold, you got to shave some off or drill it out or whatever it is. So it improves upon gold. The thing it doesn't have going for it, though, is its track record. Gold's been around for millennia. And so this now gets into your second part of the question of why is gold outperformed? And I think, at least at this point, I think it's because you see central banks in other countries buying gold, other institutions, they're dumping treasuries. And why are they going to gold rather than Bitcoin? Well, because gold already has that established history. They already have all the channels and all the infrastructure in place to buy gold, especially central banks. It's already okay for them to do this. Now, interestingly enough, we just got today, the very first central bank has bought Bitcoin, the Czech National Bank, so the Central Bank of the Czech Republic. Now, granted, they did this in a test account, so it is not part of their general foreign exchange reserves. They also were very explicit that this is $1 million US, so very small. They're not going to add to it. But I think it's a huge signal because it's the first central bank to do it, and it shows that they can do it, and they're doing it explicitly. And they said this in the press release to figure out how it worked, to get their hands dirty. And they said, we're not just going to read and write about it. We're going to test it out. You have to have real world experience. And that's exactly what we see with investors, from the retail investor to the institutional investor. At some point in time, for them to really understand it, they got to get their hands on it and play with it and actually see how it works to get comfortable with it. So I think gold and Bitcoin have a lot of the same characteristics. I think Bitcoin, if it just becomes digital gold, that's great, but that's to me a very low base case, because it's more than that. It's programmable money. There's so much more that can be built on top of it, so much more that can be done with it. And so we have to think of it differently, right? But that takes time. Now, what happens in the short term, though, I think is very interesting. I love to steal the phrase from my colleague, Jurriën Timmer here at Fidelity, who says gold and Bitcoin are different players on the same team. They're driven by the same macro factors, but they don't move together. They usually hand the baton off one to the other. And so you could say, well, are we going to see a catch up from Bitcoin? Or if you look back, you could actually say, like, well, gold is actually just catching up to Bitcoin now. So we'll see how it plays out. But I think there's the same drivers behind it. They're just in different investor segments. People who are familiar with gold and they turn to gold, versus those that are now starting to say, hey, what if we look beyond gold to Bitcoin for some of those same exposures, same benefits?
Yeah. Got it. Thank you very much, Chris. I guess maybe just to finish up this part of the podcast and finish up on Bitcoin, I think I saw another tweet on X. We won't call it Twitter, definitely on X. But it's increasingly part of the Bitcoin conversation. Of course, the perceived potential threat of, quantum computing and what that means. Obviously, not just for Bitcoin, but for, well, the world in general. But let's just, I guess, stick to Bitcoin. How do you think about this? And is it something that, I guess, what is the time frame and how much of a concern, I guess, is it, Chris?
Oh, if you could tell me the time frame, that would be great, because that is the one thing obviously I'm not a quantum expert, but we have quantum experts at Fidelity, which is great. So we talk to them and we talk to other people in the industry. And I've gone to a few technical conferences. At the last Bitcoin conference, there was also side events and things for this question of quantum. From my perspective, and I'm going to take the role of other people out there who are investors in Bitcoin, but they're not quantum experts. I think so far, and this can change, but the main takeaway I have is it is a real threat. And computer scientists have identified this as a real threat years ago, decades ago. And they've been working on it for decades. So this is not new. It's not something that's come out of nowhere. The big issue, though, is the time frame. I've heard anywhere from a few years it will be here to, oh, this is going to be decades away, 20, 30 years even. So that's the big question. The second part people need to know is this is not necessarily a one and done be all end all event. Number one, the Bitcoin community already have solutions for this. There are different Bitcoin improvement proposals, BIPs, that could change the cryptographic pieces of the Bitcoin code and move them over to a quantum resistant one. The question is just, that comes with trade-offs. And so which one do they want to choose? Because different paths have different trade-offs. Mostly, it becomes a lot more resource intensive to verify these transactions, or the blockchain gets a lot bigger, things like that. So that's number one. We have the solutions. It's just a matter of what do we want to choose? What trade-offs do we want to have? The other thing is the thing that will be most vulnerable are the very old coins that are still locked in an old address type. And not to get too technical here, but like basically what that's saying is coins like Satoshi's coins that were mined and never moved, those could be cracked by a quantum computer. Because you can see the public address, you could potentially derive the private key from that public address. So there may in fact be a big bounty out there for someone who cracks quantum and they get all of those coins. And there's some proposals as to what to do with those, whether those should be time locked or so they can't hit the market all at the same time. Won't need to get into that. But if that's the worst case scenario, if somebody gets a few $billion bounty or something, like maybe that's not what a lot of people would like, but let's be clear, that doesn't break the network. They didn't double spend the Bitcoin. They didn't create new Bitcoin. They're just taking control of some very old Bitcoin. So that's like just one example of some of the nuance here. It's not just like, oh, quantum computer comes and the whole thing just blows up and everybody's Bitcoin is worth nothing. Like I suppose that's a possibility, but to me, that's a very, very, very low possibility. And so I think those are some of the things we're trying to communicate and understand and get people to understand. But it's definitely something we're watching, and it deserves attention. And we'll continue to keep an eye on it and try to understand this.
Fantastic, Chris. Yes. I'm reassured. Okay. It's time to start to finish up the podcast then, Chris. And of course, we do that by running you through the very famous crypto conversation hot take round. Are you up for it?
All right, let's do it.
Let's do it, Chris. I'm just going to run some questions at you. I just want you to give me your kind of, I don't know, like quick kind of rapid fire hot take style answers is how we like to describe it. No right or wrong way to do it. Question one for you is very simply, where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Maximalist in terms of Bitcoin as a monetary good, opportunist when it comes to any other use case.
Yep, perfectly articulated. All right. Well, Chris, what would you say is your firmest conviction crypto opinion?
Probably related to the first, that I believe Bitcoin is best viewed as a monetary good, and I don't see anything supplanting that in the near future. And I used to be in the camp that Bitcoin's like MySpace and the Facebook's going to come along, or Bitcoin's like the Alta Vista of search engines and Google's going to come along and replace that. And I got rid of that notion many years ago, thankfully. And I continue to hold that today.
I like it. All right. Chris, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. Look, pick your poison here. Bitcoin, blockchain as a whole, the multi-chain universe, Solana, whatever you like, really. What does it look like in 10 years' time?
I'm tempted to say this, and it's going to come across as a cop-out answer, but nobody knows, and it's going to blow away everybody's expectation. The reason I say that is because if you look at technology, again, I used to be a tech analyst, put that lens on. Whenever new technology comes along, everybody just maps it to the current world. When the internet came along and the personal computer, they said things like, oh, you can email instead of snail mail. Oh, you can take your big encyclopedia that's taking a whole shelf on your desk and put it on one CD-ROM on your computer. Those were all true. But looking back, that was laughably like small, narrow-minded things. Nobody could see, for example, once you had the internet and the cell phone and then the smartphone and then GPS and then apps and all these things come together, you would have an entirely new industry with phone apps and entirely new business models like Uber. You wouldn't have even imagined those things could exist because you couldn't see that far ahead into the future. So maybe a bit of a cop-out answer, but whatever anybody else says, I guarantee you they'll be wrong and it will be far surpass whatever they think.
Yeah, wonderfully said. Could not agree more. All right, another way of thinking about this, Chris, it's a wonderful quote which you will have heard of by sci-fi author William Gibson, who famously said that the future is already here, it's just not evenly distributed. Now, with that in mind, Chris, can you think of an example of the future being here right now, but most people aren't aware of it?
Ooh, I love that quote. I should have thought about this more if I could have. I I think probably like I look around and so much of the world is not aware of this technology. Everyone's heard of Bitcoin and they think they like, oh yeah, I get it, Bitcoin. I don't think they're fully aware of how disruptive this could be. And I feel like this must have been what the early internet and .com entrepreneurs thought of, where they felt it and they knew it in their bones that this kind of stuff was going to change the world, and everybody else didn't yet. That's how I feel. I personally think Bitcoin is and everything else that has come after it will go down in history as a technological advancement on par with the internet, with the printing press, you name it, the wheel, whatever it is, it's going to be up there. And so few people are aware of that yet.
Yeah. I like it. Solana, just what's the hot take on Solana? You guys have published a number of fascinating, I guess, research pieces on Solana recently. How are we thinking about Solana?
I'm not a Solana expert, but I'm fascinated by it. And the thing that fascinates me is the core question. I don't have the answer to this yet, but the big question of people obviously favor Solana for its speed, its efficiency, but it's not as secure, decentralized as Ethereum. So the big question to me is, do people care about decentralization? And that's going to be the number one thing. And you see Ethereum moving more and more to look like and compete with Solana. You still see the value, the majority of the value locked on Ethereum. So that tells me people do trust Ethereum more, but eventually do get to a point where they just don't care about decentralization for some of these other applications. That's the big question for me.
Yeah, perfectly said. Again, could not agree more. And brings us nicely to the final question, Chris, which is very simply, what is your favorite science fiction book, film, or TV show?
Oh boy. So I'm a big sci-fi fan. I was blown away by Dune when I finally got down and read the book. Probably not my favorite. Favorite movie would definitely be Matrix is up there, mostly because I grew up with it and that was my era. So it's got a special place in my heart. And sci-fi book, um, I thought Necromancer was quite mind blowing when I read that one too. So that one holds a pretty high markup there. But I don't know. I'd have to think about that more.
Yeah. No, I think the Matrix and Necromancer are fantastic answers. And yeah, when people ask me this question, I usually just go for the first Matrix film because it's just has so many references, everything from simulation theory to literally the Matrix, and the red and take the red or blue pill. So yeah, great selection. We're happy with that, Chris. Look, that brings us to the end of the show, really, Chris. This was a lot of fun. Thank you for coming and spending some time with us today. I guess just to close it out, tell people where they can find you on X, where they can go to, jump into the wonderful world of Fidelity Digital Assets and explore the various research offerings and so on that come out from your team. What should people do?
Yes, just go to fidelitydigitalassets.com. We put almost all of our research there. Click on the research tab. You can sign up to get our research for free. And then I am at Chris J. Kuiper, Kuiper, on X.
Awesome. Thank you so much, Chris. All the best, and bye for now.
Yeah, thank you. My pleasure.